Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil flows. Goldman says exports from the Persian Gulf have recovered to about 2/3 of pre-war levels. This is as producers find ways to ship more crude through the Strait of Hormuz. Venezuela weighs an exit from OPEC as Washington discusses taking a major stake in the country's oil fields. And all ears on Jackson Hole as investors wait to hear Fed Chairman Kevin Warsh's first speech at the symposium. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. We are in a public holiday here in the UAE, but not a lot of places are on a public holiday. But then when you look at what we're looking at this morning, U.S. futures not doing much, a little bit of a flat movement to the downside, of course. This is Jackson Hole happening later today. We've been talking about it all week. It's now here. Of course, we have the special show coming up, so stay tuned for that. But then investors are essentially bracing for what happens at the symposium later today. Will Kevin Warsh give a little bit more guidance? Would he not? The consensus is probably more of the same, but we'll have to wait and see. And then, of course, the U.S. Treasuries are also a big part of that story. The 10-year yields, although they're not doing much this morning, about a basis point higher, 4.68%. They were seeing big moves over the past 10 days. We're keeping an eye on the 30-year yields, those so bigger moves in the early hours of trading. And then Brent crude dropping again 0.6%, $89 on the barrel. Of course, a lot of stories happening in the oil trade. Goldman, as we have mentioned in the headline, says that Gulf oil flows through the Strait of Hormuz are at about 15 to 16 million barrels a day. Now, that's still well below pre-war levels, but much better than levels in March. We'll talk more on the show about that. And then, of course, Bitcoin a little bit disappointing now because it was touching $80,000 earlier in the morning, but is now just slightly dipped below that. Still a positive performance. Of course, this is the enduring ETF demand and a brighter mood across speculative markets. But speaking of wider markets, we have Winnie Su standing in Hong Kong for us to tell us more about what's happening in Asia this morning. Winnie?
Yeah, good morning, Abir, and happy Friday. Well, we are seeing Asian stocks rising for a fourth day. Perhaps still a bit of that wait-and-see mood ahead of Kevin Warsh's speech later at the Jackson Hole Symposium. But overall, we are at the end of, close to the end of the month. And when you look at the monthly performance, actually, Asian stocks have been doing pretty well and headed for its best months in a few months already. Now, the gains today, though, being led mainly by Japan and Taiwanese stocks, while we are seeing a bit more weaknesses coming through in Korea. And perhaps some say that there has been this popular trade of shorting Nvidia and longing some of these memory chip stocks. And we are seeing a bit of a reversal of that as Nvidia stocks gained yesterday on the back of those strong earnings. Now, before we take a look at the currency space, because that back-to-back rate hike from the Bank of Korea yesterday continues to push Korean won stronger. And it is actually one of the best performing Asian currencies today, and as well as the best performing Asia currency and major currency globally so far this month. And following that, we have the Taiwanese dollar also strengthening to its strongest level in about 2 months. However, the weakness, though, is being seen in Japanese yen, which is weakening for a fifth session already. Clearly, that joint intervention magic is slowly fading out. However, the expectation for the Bank of Japan to raise rates is still ramping up, and that is why today, when we had that 2-year bond auction earlier, we saw weak demand for that. Plus, the tail, which is the gap between average and the lowest accepted prices, is actually at its widest since 2016. So the appetite for the JGBs remain quite weak there. Back to you, Abir.
Bloomberg's Winnie Su in Hong Kong. Of course, she'll be back with us in about 30 minutes or so. Now, some other stories we're looking at this morning. Qatar's prime minister has discussed ways to resume diplomatic talks between Iran and the U.S. during meetings in Tehran. Sheikh Mohammed bin Abdulrahman Al Thani said dialogue is the best way to avoid further escalation. However, Iranian officials said Washington must first meet conditions it committed to under the MOU. Meantime, the Trump administration has reportedly told mediators it has no interest in going back to the terms of the June peace agreement it reached with Iran. The Wall Street Journal report says the president is set on his policy of squeezing Tehran economically. And Iran's military said this week that it had reached a revenue-sharing agreement with Oman on the Strait of Hormuz. This is as Tehran and Washington standoff continues. And U.S. Central Command says it has successfully cleared all sea mines in the Strait of Hormuz. CENTCOM says no ships have entered or left an Iranian port without U.S. permission, and that international shipping lanes are now open.
We have successfully cleared sea mines in the Strait's international shipping lanes that were laid months ago by Iran's Islamic Revolutionary Guard Corps. Bottom line, today, international shipping lanes are open and momentum is building.
And Goldman Sachs says oil exports from the Persian Gulf have recovered to around 2/3 of pre-war levels, limiting the Iran war's impact on global crude supplies. Analysts say higher crossings through the Strait of Hormuz have helped total exports of crude and oil products from the region to rise to 15 to 16 million barrels per day. So let's bring in Stephen Stepchinsky, who leads our energy coverage out of Asia, to discuss more on this story. Stephen, good to have you on. Welcome back. 15 to 16 million, how does that compare with our estimates? And can we expect to see more of this upswing in those oil exports through Hormuz going forward, especially with that agreement underway?
You know, it sort of matches what we have. You know, that 15 to 16 million barrels per day. That's not all just Hormuz flows. That includes also the east-west pipeline for Saudi Arabia. They send oil through there out of the Red Sea to customers in Asia. But we essentially, I think the view has been that about 6 to 8 million barrels per day of oil has been going through the Strait of Hormuz recently. That's up from about 4 or 5 million barrels the month before. And that matches what, that's what traders have been telling our Bloomberg reporters. The U.S. government as well has said that about 8 million barrels or more have been getting through. And Vortexa, a company that tracks satellite and vessel data, says that over the 10-day moving average, it could be about 10 million barrels per day. So it is certainly on the up track. It is less than where we were before the war began, but still much higher than we were, let's say, for example, in March or April.
Stephen, let's shift gears a little bit. Still a monumental story, a fresh blow to OPEC. Venezuela, this is our scoop, of course, might be considering leaving the OPEC cartel. Where does that leave the group, and where does that leave its importance more specifically?
You know, they continue to shed members. Famously, just a few months back, the UAE also left OPEC. So Saudi Arabia, the de facto leader of this group, is losing more and more supply. And as they lose members for different reasons, their importance will, of course, wane. Already, there have been questions about the importance of OPEC and OPEC Plus, which is the allegiance between those producers and Russia, especially with the rise in U.S. Shale oil. You saw in the aftermath of the Middle East crisis and the drop in flows in March and April, you saw a big increase in U.S. oil and product exports, helping to kind of make up some of that gap. And as OPEC Plus is gearing back to a market with Hormuz eventually reopening, if they have less members and less might, their ability to kind of push the market in certain directions will certainly be diminished. And this is very important for Saudi Arabia because they need to come back into marketing and resume getting customers as well. So they're looking at drastically increasing their production and whether they're able to get other members to do so, whether they're able to dictate the caps for other members, including Iraq and others, it will be in larger question. I think one thing to take note of, though, is that we are seeing this setup between OPEC and the United States, the U.S. being such a large producer of oil and gas thanks to the shale boom, but also now with potentially taking a stake in Venezuela, that influence appears to be increasing.
And Stephen, just briefly on the demining process in the Strait of Hormuz, that's been a big talk over the past couple of days or so with a lot of back and forth statements. How big of a factor is that for ships that have been trying to cross the Strait of Hormuz from what you hear from those ship owners?
I mean, it's clearly it's important, right? You need to get rid of the mines to make sure that there's safety in the strait. But there's more than just that. Ship owners are also dealing with constant attacks, drone attacks on their vessels. ADNOC, the UAE oil and gas exporter, has had their vessels continuously attacked. And we're not talking about mines. We're just talking about them getting targeted through going through the waterway. They usually take the Omani route, which is what Iran says is not designated as their way through there. As well, you also have to have crews that are happy and willing to go through, because it's not just a matter of ship owners saying, hey, get this vessel out of the Persian Gulf or through Hormuz. It's also a matter of getting those who are on board the ship willing and happy to do this. And also insurers. So there are a lot of factors that go into whether or not a vessel decides to go through Hormuz. Mines are clearly one aspect of it, but just clearing those does not reduce all of the risks for the region.
All right, Stephen, we're going to have to leave it there. Stephen Subchinsky, of course, who leads our Asia energy coverage. Now, U.S. Trade Representative Jamieson Greer says Washington should consider banning some Canadian goods as their trade war heats up. Washington has slapped tariffs of 50% on $20 billion of Canadian imports, while Ottawa's retaliatory duties kick in next month. The clash is set to escalate, with President Trump signing an order renaming Lake Ontario as Lake America, saying the move takes effect immediately.
They treat us very badly. Canada treats us very badly. People oftentimes, they'll ask me, who's the worst to deal with on trade? And I said, that's easy, Canada. They are the worst to trade, and they feel entitled, and just we can't have that.
Our next guest tells us why she thinks Jackson Hole will be interesting to watch. This is as Kevin Warsh completes around 100 days in his new role. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Investors are waiting to hear from Fed Chairman Kevin Warsh when he takes the stage at Jackson Hole on Friday. Ahead of that, Kansas City Fed President Jeff Schmid argues that rates may still need to go higher to get inflation back to target.
The last Q3, Q4 data for me last year was, I thought we certainly weren't restrictive and maybe even a little accommodative. So we've got work to do.
But not everyone at the Fed agrees. Some policymakers say rates are already helping to cool the economy. And with views split, investors will be watching Warsh's speech for answers. Bloomberg's international economics and policy correspondent Michael McKee reports from Jackson Hole.
The new Fed chair takes center stage at the opening of the symposium Friday. Wall Street wants to know if he's ready for the spotlight. Kevin Warsh has been here before as a Fed governor during the financial crisis, but he wasn't the person investors looked to for guidance. Now he is, but so far he's failed to provide it. Warsh argues the central bank shouldn't steer Wall Street by telling investors what the Fed will do. He'd prefer to discuss the reforms that he hopes to bring to the Fed and the 5 task forces he's appointed to support them. Investors only want to know what the Fed could do, how he thinks about inflation, and how he plans to keep his promise to bring it down to 2%. Michael McKee, Bloomberg, Jackson Hole.
Well, Treasury markets are pricing an uneventful event as Fed officials remain divided on the inflation outlook. Here is Chicago Fed President Austin Goolsbee is speaking on the Bloomberg's Odd Lots podcast.
I need evidence that inflation, that this inflation shock is not going to be persistent, and I'm okay with waiting as we're getting that. But if the evidence starts coming back, especially on services, that it's high, it's going the wrong way, we're not making progress, then I'm going to be nervous.
So let's bring in Selina Ling, OCBC chief economist, to discuss more. Selina, good to have you with us. Of course, you were hearing Austin Goolsbee speaking earlier, and of course, we heard from Mike, and the expectation on what is going to happen in Jackson Hole later today. So when it comes to the symposium and what we're expected to see out of it, do you think that the conversation shifts from exactly the rates conversation to restoring confidence back to the Fed and perhaps a little bit more forward-looking guidance?
Well, I think it's going to be a very interesting Jackson Hole, not only because Kevin Warsh is, roughly about 100 days into his chairmanship, but he's also making his debut as the Fed chair for the first time at this symposium. So markets really going to be looking for clues. We already know that some of the Fed officials are quite divided on what they should do next. But if you look at the market pricing for the September FOMC, it's only roughly pricing in about a 1/3 chance of a rate hike. I think the economic cues are a little bit mixed at this juncture. You still have headline PCE running a little bit hotter than the Fed's 2% inflation target, but the core inflation is a bit lower. And then if you look at the labor market, which is the second part of the dual mandate, we already know that the unemployment rate is steady at 4.1%, but non-farm payrolls have come off. So the Fed really has to walk a very tight rope between being seen as being tough on inflation, but without doing anything to exacerbate the potential slowdown that may come. So I think Warsh is probably going to maintain a slightly hawkish bias, but he's probably going to keep the cards quite close to his chest. He's not in favor of too much forward guidance. So I suspect it may be really a lot of passing over the nuggets of information he may give, but it may be a non-event.
Okay, Selina, let's think about rate hikes, rate cuts into September, into December. Do you think that with inflation, because you mentioned inflation still being above target, do you think that the risk then becomes a premature rate move or markets losing faith in inflation going back to 2%?
I think there are a couple of factors at play here. It's not really just about the credibility of the Fed guidance and policy making, but it's also being overshadowed by, the whipsaw that we saw in the longer dated Treasury bond yields, and that's really very much tied to the fiscal story. So the surprise announcement by Besant about the doubling of the buybacks, and really whether we're going to get a full alignment of monetary and fiscal policy, that's still yet to be seen. But with a Fed chair that is basically, in favor of less guidance rather than more, and then we're kind of in this, transition period where we're waiting for the recommendations of the 5 task force, everyone's really left to second guess, and the data doesn't show a very, huge conviction either way. So I suspect that, the Fed's path of least resistance is really to do nothing. If they really are cornered into having to do a hike, our view is that, come, 6 months' time into 2027, when the growth and inflation cues will probably be lower, that would probably be a policy mistake that they will have to unwind. So that's really, underpins our view that actually the best path forward is to sound hawkish, but really not to act on it.
Okay, and so let's talk Treasury versus Fed with the buybacks that we've seen, with the elevated yields that we've seen. Do you think going forward we might see a new era of the Treasury dictating or influencing financial conditions as much as the Federal Reserve?
I think the Treasury may try to engineer softer Treasury bond yields, but whether they would succeed, if you look at the market action that we've had, the round-tripping yields that come off at the longer end, but they didn't really persist there for too long a period of time. That suggests that actually Treasury actions by itself may not be sufficient to guide yields permanently lower. So like I said, unless you get a full alignment of both monetary and fiscal policy in the same direction, I think it's going to be a challenge. I mean, everyone looks at the headline, debt levels and how much interest costs the U.S. Government has to finance. And if rates stay at current levels, it's going to be a persistent problem for the U.S. administration. So I think the fiscal sustainability part really has come into play, and there are no easy solutions around that. It's either a matter of trying to cut expenditures or to cut interest rates or to do something about, the whole fiscal trajectory going forward. Yeah.
Selina, we're going to have to leave it there. And we look forward to what happens later today at Jackson Hole. Of course, Selina Ling, OCBC chief economist with us. Now, coming up, Live Golf lands in the rough and faces an uncertain future amid a surge for funding. More details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Once seen as a lucrative alternative to the PGA, Live Golf has instead landed in the rough, part of an abortive effort by Saudi Arabia to exert soft power. Now, Live's future is uncertain amid a search for new funding.
Overnight, the most polite sport in the world tore itself apart.
The new Live Golf Series has launched with a tournament in London.
4 years ago, some of the PGA's top players defected to Live Golf, seeking a sweeter payout.
It was a business decision, first and foremost.
Mickelson reportedly signed a deal worth $200 million.
The breakaway league truly fractured professional golf.
I disagree with it. They've turned their back on what has allowed them to get to this position.
Live Golf's business model was predicated on the whims of one nation, Saudi Arabia.
In less than 5 years, the Saudis spent over $5 billion on Live Golf.
It was meant to be the ultimate soft power flex.
But times have changed.
It's very expensive to run this league. And then you have a war happening in the Middle East.
Saudi Arabia's Public Investment Fund announced it will be pulling its funding at the end of the season.
That's left Live looking for someone else to help foot the bill.
We're very fortunate that a lead investor signed a term sheet approved by our board.
So how did this glamorous scion of the country club scene suddenly find itself in the bunker?
Subscribers can watch that documentary in full right now on the Bloomberg terminal and on Bloomberg.com, and it will be up on Bloomberg Originals, the YouTube channel, a little bit later. Now, before we head to the break, a quick look at where equity benchmarks are sitting. S&P futures still not doing much, waiting for that Jackson Hole meeting. Nasdaq 100 futures tilting a little bit downward, and then we're seeing a more positive start to the Euro Stoxx 50 futures. And coming up, ahead of Jackson Hole, we will discuss gold's fresh impetus after the United States Treasury's bond market intervention. That is coming up next. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil flows. Goldman says exports from the Persian Gulf have recovered to about 2/3 of pre-war levels as producers find ways to ship more crude through the Strait of Hormuz. Venezuela weighs an exit from OPEC as Washington discusses taking a major stake in the country's oil fields. And all ears on Jackson Hole as investors wait to hear Fed Chairman Kevin Warsh's first speech at the symposium. It has just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Happy Friday. It is red across the screen, but let's take a quick look at what risk assets are doing. U.S. futures not doing much this morning, a little bit of a flat movement to the downside. This is all investors bracing for what is set to happen later today at Jackson Hole. Of course, we have special coverage out of there, so stay tuned for that. And then we keep an eye on a similar part of the same story, which is the yields. The 10-year notes are not doing much this morning, less than a basis point higher at this point. Of course, the 30-year notes, we're seeing a little bit more movement there. But again, the treasuries have been moving in tandem with those speculations around what the Fed is going to do or not do. And then Brent crude prices, of course, a big thing for us to watch in this region. 0.6% lower this morning. You're looking at Brent at $89 on the barrel, with that Goldman report suggesting that oil flows through the Strait of Hormuz have recovered to around 2/3 of pre-war levels. Just to get the maths right, that's about 15 to 16 million barrels a day. Still 7 to 8 million barrels below pre-conflict levels, but well above those levels we saw in March. And then, of course, Bitcoin below $80,000, but it did touch the $80,000 level early in the morning. Of course, this is enduring ETF demand and a brighter mood across speculative markets that is causing a good move in Bitcoin over the past week. Now, for a quick look at what markets in Asia are doing, we have Winnie Su in our Hong Kong studio. Winnie, what do you have for us?
Yeah, morning, Abir. Well, sentiment is quite stabilizing here in Asia today, with Asian stocks here rising for a fourth session, also headed for its best month since May. Now, of course, all eyes are on the Kevin Warsh's speech later today at Jackson Hole, but also perhaps also supported by the lower oil prices as well as the jump in Nvidia shares yesterday, and that's helping shares in Japan and Taiwan specifically, while the jump in Nvidia shares overnight is also prompting some sort of a rotation away from the memory chip stocks in Korea. And that is why you are seeing Kospi here today being a drag down more than 1%. Now flip the board, a quick look at the cross-asset picture, because yesterday's back-to-back rate hike by the Bank of Korea continues to push the Korean won stronger against the dollar. It is, in fact, the best performing Asia currency as well as global major currency so far this month, while we continue to see the weakness coming through from the Japanese yen, weakening by a fifth day. So, of course, that is prompting investors to continue to bet on the Bank of Japan to raise rates earlier. And that expectation is also driving a pretty weak demand today for this 2-year JGB auction today. And we also see the tail, which is the gap between the average and the lowest accepted price, at its widest since 2016. So appetite for these bonds are very low. And that is why we are also seeing the 30-year JGB yield here jumping by about 4 basis points today. Back to you, Abir.
Winnie, thank you as always. Now, let's move on to commodities. Gold is about 14% higher this month. The bullion gave fresh impetus by given fresh impetus by the United States Treasury's unexpected intervention in the bond market. So with us now to discuss these moves is Guy Wolf, Global Head of Market Analytics at Marex. Guy, good to have you with us, especially at a time where we're seeing these massive moves in gold, some other metals as well. I'm actually taking a look at the MSCI Global Gold Miners Index, which is up 43% this month. So I guess the question is simple. Do you expect more of an upswing in gold going forward or until the end of the year?
Yeah, I think it's just probably important to remember what it was about gold that triggered such a frenzy towards the end of last year, beginning of this. And it's really, I guess, fears around fiat currencies generally, not simply the dollar, because gold was going up in every currency. But of course, every currency can't be weak. Currencies are ratios to each other. And so most of the fears that people have around the US actually can be applied to many other economies. Too much debt, aging populations, large fiscal deficit. And whilst the sort of intervention by the US Treasury certainly was very unexpected, we can't forget that we've also had intervention in the Japanese yen recently as well. And I think these are the sort of things that have triggered a resurgence of flows into gold and indeed Bitcoin on this sort of defiatization theme picking up again.
Yeah, so you mentioned yields, interestingly. And what does it tell you really about investors when yields are elevated and gold is rallying? What does it tell you about their appetite or where their anxiety comes from, if there is any?
Well, I think that there's also, the other big event in gold over the last few years has obviously been the resurgence of gold as a central bank treasury asset, which has been an underlying bid to the market that I think continues to be the case and will continue to be the case for quite a long time. But one of the other factors that we've seen recently is actually much more retail appetite for gold, particularly physical gold. And you've seen recently both Hong Kong and Singapore announcing they're looking to develop local physical gold trading hubs and are accumulating physical gold reserves. Hong Kong, I think, has got a target of 2,000 tons of gold to be held domestically to facilitate that over the next 3 years. So, yeah, in the short term, gold is in favor. And for as long as investors fret around the future path of rates and debt sustainability in the US and elsewhere, then I think gold will stay supported. I think we have to go through a bit of a learning process with the new Fed chairman. The end of forward guidance is something the market is going to clearly struggle to come to terms with quickly.
Okay, Guy, it's not just gold, though, right? We're seeing gold, silver, copper, some of them at record highs or edging close to record highs. Do you think that this is a macro trade or a genuine move to a capex commodities cycle?
I think we are in a new commodity super cycle. We're seeing the most appetite we've seen in commodities since the Chinese super cycle, but one could argue this one's even broader. So obviously the other metals you mentioned, copper, silver, different dynamics to gold in a way. Although earlier on this year we did see just appetite for metal full stop on this defiatization theme. But obviously the AI and renewable energy capex super cycle is a major driver of a lot of these moves. Copper and silver absolutely at the epicenter of both of those.
Yeah, definitely. Guy, thank you for your insights today. We're going to have to leave it there. Guy Wolf, of course, Global Head of Market Analytics at Marex. Now, Kansas City Fed President Jeffrey Schmid says U.S. monetary policy may be accommodative rather than restrictive. Speaking to us at Jackson Hole, Schmid cited underlying demand pressures that he believes could justify a rate hike.
If I'm going to be consistent, and I was a voting member last year and dissented a couple times. At the time, even the last Q3, Q4 data for me last year was, I thought we certainly weren't restrictive and maybe even a little accommodative. So we've got work to do. There's a demand element underneath all of the supply conversation that gets talked about that I just need to try to figure out, because for me, we do a lot of informal surveying around the district, and I would say it's kind of a little bit like the FOMC meetings. You've got a half of the people that say, well, it's certainly not restrictive. It seems like it might be close to about right, but for me, I think it may be accommodative on the short end.
How do you measure that?
So it's a really good question. And look, the data sets are massive, right? I mean, what you've got to do, I think, and I even have a tendency to do this, is you got to be careful about looking at, one or two prints. You really have to be thinking about the macro over the micro, because even in the district, I can get around to places, and some communities are booming, some are just doing okay. I mean, I think even about industries, the cattle industry is booming, but the poultry industry is soft. And so you really do have to be thoughtful about that, because what happens to me, and this has been my personal experience over the last 3 years, is we got it to 3, sub 3, and then it even gets harder because you don't want to overshoot with the policy rate decision. So you want some deflation down to 2, but you don't want you want deflation but not disinflation. And so that it gets harder. The decisioning gets harder. But for me, I think there's a lot of demand elements underneath this economy that I think a bit higher rate might make sense.
As soon as September 16th?
So I think for me, giving the chairman some room is important. I think these task forces are going to be instructive. I think the FOMC is looking forward, in my opinion, to those. I think there were some of my colleagues dissented at the last meeting. So I would probably put myself in that camp. But here again, there's really good arguments on both ends of this policy decision. So let's get a little bit more data. Let's see what the task forces are going to say over the next successive meetings. Maybe there's a bit of a reset that we have to make. But for me, I think we're a little on the accommodative side.
Well, if you probably can't make this official pronouncement, but would you assume, as most people do, that October 28th is off the table because it's too close to the election?
I don't think so, Mike. I think we had this discussion about independence. We get in that room. We are able to speak our truth about what we think the economy's doing. I just don't think it enters into the equation. It certainly doesn't enter into my equation. We have a mandate. It's keep prices at 2% inflation and keep employment and labor full. That's a pretty simple mandate. So I can make decisions. I can at least offer my opinion around that and be hopeful that maybe other folks on the FOMC think the same.
Does the Fed have a credibility issue? There's a lot of talk about on Wall Street that it might.
Well, for me, I just don't see it. I mean, I think if you look at the two great cycles that challenged the Fed, be it the post-08 and the post-COVID cycle, we might have missed a few things early in the 21-22 cycle, but we used policy rates to try to push inflation down. We were trending pretty well. I think we were doing our job. I think we were thoughtful in some of those moments where the labor force was structurally changing, which it still is. And so for me, I think we're doing our job. We just haven't gotten to the point where we can say, hey, we're at a good place, maybe reminiscent of kind of the cycle of the 90s where you get inflation down to 2%, you have full employment, and then you start to use your policy rate in kind of a cycle and wave to just keep the economy moving along well.
That was Kansas City Fed President Jeffrey Schmid speaking with Bloomberg's Michael McKee at Jackson Hole. Now, coming up, Nepal confronts one of its worst disasters in years. We hear from the chairman of Chaudhary Group next. That is coming up. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Officials in Nepal say more than 1,200 people are still missing after this week's devastating flash flood near the Chinese border, including hundreds of foreign visitors. More than 380 people are confirmed dead after a wall of water and debris rushed down a mountain valley, smashing buildings and bridges and burying villages. It's believed the disaster was triggered by the collapse of a glacier in the Himalayan region. Speaking exclusively to Bloomberg, Nepal's Finance Minister Swarnim Wagle explained they are still assessing the full damage.
We're still working on an exact scientific, estimation of the loss and damage. We should have that in a week or so. But preliminary estimates are quite worrying. In addition to the terrible loss of lives, the local residents, tourists, pilgrims, hydro workers, private homes, thousands of private homes and land, agricultural land, commercial land, this 80-kilometer stretch of road leading up to the border with China, dozens of bridges, and from the private sector side, 700 megawatts of either running or installed hydropower capacity has taken a hit. And cumulatively, I think the losses and damages, when they will be finally quantified in a week or so, I think will amount to at least a few $1 billion.
And Binod Chaudhary is chairman and president of Chaudhary Group and was a major donor to the 2015 Nepalese earthquake relief operation. He's been speaking exclusively to Bloomberg's Haslinda Amin about the scale of the recovery operation the country now faces.
Still very early days, but we do believe that it'll run into several hundred billion rupees, probably. I won't be surprised if it runs into at least $5 billion to convert in the dollar term. I mean, it's not really also the money, the amount of time it takes, the effort it takes, given the terrain, the difficult geography. If you recall the 2015 rebuild effort, where our group was heavily involved in rebuilding the shelters, the schools, and all the other establishment, it took us 7-8 years. So what we have resorted to now is the immediate task is to provide relief materials to the people, open several camps in these villages, mainly in Rashua, Nuwakot, and Dading area. We have done. We're working very closely with the local administration, government, and the army, and then immediately get down to the job of starting the process of the resettlement by building the shelters for these people, schools for the children, and also getting the economy back on track.
Binod, you took part in the rebuilding of Nepal after the earthquake, contributing about $2.5 million. How are you looking at contributing to this rebuilding this time round? Have you been approached by the government?
Yes. We are working very closely with the government. We have been in touch with not only the Home Ministry and the Finance Ministry, but also with all our local partners who are active in that area. We have our establishments in the areas which have been affected, the branches of our bank, the branches of our distribution system for the FMCG businesses. We have mobilized everyone. We are working very closely with the army, and hopefully we'll be putting together immediately in the next 2 days the shelters, immediate shelters needed for a bulk of the people who are displaced. And then we will start the process of, once again, the rebuilding exercise of building homes, as well as supporting, re-energizing the businesses, and also probably working on rebuilding of the schools. So I will not be able to give you a number right away, but the numbers will be probably far bigger this time than what we did in 2015.
That was Binod Chaudhary, chairman and president of Chaudhary Group, of course, speaking to Bloomberg's Haslinda Amin. Now, coming up, Zambia's disputed election result escalates into treason allegations. More on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Zambian police have kept the country's main opposition leader and his deputy in custody. This is after questioning them over treason allegations. The news follows the August 13th election, which saw incumbent President Hakainde Hichilema secure victory with almost 61% of ballots cast. The results have faced scrutiny from national rights groups who have petitioned the Constitutional Court to void the outcome. So let's get more from Bloomberg's chief Africa correspondent, Jennifer Zapasaja. Jen, good to have you with us this morning on this story. What specific irregularities do we know that were cited in the rights group's petition?
Well, Abir, good morning. We're hearing quite a bit from the rights groups, and also in particular from one rights group called Freedom, LCK Freedom Foundation, which is citing a few different irregularities that I feel like we should point out that they say happened in these elections. So part of their concerns really stems around restrictions that they say opposition groups had during their own campaigning. They also believe, reportedly, that there is an alteration of results, they say, in favor of President Hakainde Hichilema. We've heard some of those claims also supported by some of the electoral observers, many of them internationally, coming to a number of the elections across the continent, but in particular, the EU Election Observation Mission. And potentially, they say that the elections were not free and fair. They also cite what we've been reporting for a few days, which was a lack of freedom from violence, intimidation, and corruption. And so it's really a lot of these concerns that we're seeing now come to light in this petition. What we're really waiting for is whether or not we're actually going to hear the court actually hear this, because of course there was a 7-day deadline. That deadline expired for petitions to actually be handed into the court in order for them to challenge them. And so we're really going to wait to see really what the Constitutional Court does about this. I think it's important to say that what we're hearing from the presidency and also from his spokesperson is that we did see this deadline expire. And so as the spokesperson told Bloomberg, it really is in the court's hands now to do or to act however they see fit.
And Jen, meanwhile, how did Zambia's kwacha feed into the country's annual inflation rate in August this month?
Well, we should remember, Abir, that we've seen the kwacha actually be one of the best performers for the continent, and also for a number of currencies against the dollar. And so we're actually seeing that supported in the inflation numbers that we did get in August. So we saw the annual inflation rate in August falling to 6.2%. That's from 6.5% back in July. And we should note that that is a substantial drawdown from what we've seen. It's actually the lowest level since February of 2018. So definitely a lot of feed through from the stronger Zambian kwacha.
Jen, thank you, of course, as always, for these updates. Bloomberg's chief Africa correspondent, Jennifer Zalbasaja, with us. Now, before we send you off to the weekend, we just want to say goodbye. And that is it for Horizons Middle East and Africa. Keep it here with us for Daybreak Europe. This is Bloomberg.